Hey guys, it's Nick here. I'm sitting here in my office and I'm trading a little bit the Renko charts. I want to do some day trading and scalping. I want to get into some volatile pairs or one pair at least. And I'm using a simple setting, and also I'm looking for some late entries because markets already moved a lot. So what I'm doing right now is actually trying to make a few pips late on the trend today. Yeah, this is the daily separator here. You can see this line, this vertical line. So the day started here and over after London Open, price moved down and now it's down here. We had already our US Open session here and it's trending. Price creates 1 2 3s, higher highs, sorry, lower lows, lower highs on the chart, and I'm waiting for a short setup uh, according to a few simple rules I've set for this. The only thing I really have to do is actually to wait for retracement back to one of these CMAs and then just take action. This is very simple way to do. What you need to know is about something about money management, and of course you need to get used to actually take action, practically do it on your trading chart and trading account, um, and that's what I'm going to do here with you. Now I will pause the video in between because I don't know how long it will take for this chart to actually give me a signal, okay? Of course I'm using our new indicator, the spot and FX risk indicator. What this does is this calculates everything, the risk, the exposure for each position, the whole account, everything. So we don't have to worry about this anymore. We can manually set this. So now, because it's a scalping trade I'm looking for, and it's a late entry, as I like to call it in this case, I'll show you some settings. What I will do, the risk is 0.5%, right? Because it's a scalping trade, I will go for 0.2% risk, and I will open only one position, not multiple positions. I want to get in and out fast. Something, of course, that I'm going to teach you in much detail, depending on the market behavior, on the situation, on the chart, how you have to handle this in detail, okay? The trick is really to just stick to the basic rules for this strategy in combination with money management. No money management, no money making long term, right? Doesn't matter how good you are, how fast you trade, what trades you do, or how many trades you do. If you don't have good money management, there will be a day where suddenly everything is gone. Okay? So always using healthy money management so you can grow your account slowly long term for as long as you want. It's easy, really. Trading isn't difficult, it's really easy. So now, for instance, I have to run for a few minutes, so I'm going to place a pending order according to the rules below this support line, this 2 to 3 line I'm drawing below the price movement or activity. Also have to place, of course, my stop. Pending order is in place. I'm risking 0.2%, which would be about one lot on this chart with account size, which is a little bit bigger here than a normal one. Classic account or retail account, doesn't matter. So if price goes down and I'm not here, I will be back in about 5 minutes. It will trigger down here a sell position with a protection order, account protection order of about 20 points. The target right now is about 1 to 1 on this. That's a scalping short trade in a late entry. So I'm not going for a million pips unless it makes sense. Meaning, like if price goes down really fast, we might move the target later on and the stops as well. Okay, it took a while before this started moving actually. So as you can see, all our resistance levels are still okay. So price retraced and then moved lower, still moving lower now. And since our entry was triggered, price went down about 12-13 pips with an original stop of about 17-18 pips. So what happens, depending on what your targets are, we're going to talk about the targets, you can do all kind of things. So for instance, you can take incremental profits. It means you can, for instance, start trailing your stop over the resistance areas. We have also rules for that. And then let's say you have now a 10-12 pip stop and price move down about 12, 13, 14 pips, whatever, 1 to 1. You can start taking incremental profits. You can start trailing the stops. You can do all kind of things. Again, following simple rules that make sense. The way you would do it is just by splitting the position in multiple parts, or just manually taking parts out of the trade. Let's say you want to take out half of this. Sorry, one lot, right? You close like half of the position, and then what you do, you just keep the remaining lot running. To really start making more profits. Okay, again, there are many rules. I just wanted to create a small simple video for you, just for you to understand how simple things can be, that you don't have to freak out, that there are rules you can just easily follow. The only thing you really need is the volatility in the markets, right? So for instance, right now that we know price is still going our way, we start following those EMAs, keep partly positions of this trade, as I explained before. And what you can just do, place your next target and simply move away, so you don't have to sit here really. What I've done now, I have a target of another all in all another 40-45 pips, and the reason I placed my target down here is because we find resistance, support in this area. But this is again another story I'm going to explain. Or you can simply just close the whole thing and look for a new entry. Simple as that. Okay, it's Nick here again. Just a little follow-up because it's over an hour, almost 2 hours now since we started this trade. And again, remember, it's Renko bar, so it's filtering out all the noise on the chart. What we see here, we had trailed our stop from about 20 pips at the beginning to only 10. We took incremental profits and price went down to almost 40 points. Okay, so I trailed the target from originally up here to really down here, so there was like almost 50 pips. Okay, so price so far went down to about as I said 40, and now it's stuck at about 30. The thing is that again, as long as the price in a volatile market moves below those EMAs, we have simple rules just to stay in with a part of the position. Now you don't have to, for instance, when it's reaching 2 times your stop, in this case, after trailing the stop with only 10 or 12 pips, went down to almost 40, so about 4 times the stop. It's really up to you what you'll do with it. And as you know, in trading there are a lot of gray zones, so you have to remember, you have to know actually when to take incremental profits, when to trail the stop, when it's time to take something out, when when you should stay in and leave the trade running for longer, and when you see the first signs of weakness to get out, even if the target is much bigger or the next area of support and resistance is closer kind of, but it's not really touching it. You need to figure out when it's time to let loose and get rid of the trade, not to fall in love with the existing trade too long. So right now, there's nothing says that we cannot stay in, but it's totally up to you when your main target of, in this case, about 20 points is reached and price went down to almost twice that much. You can always, especially on Renko charts, just close everything and get rid of the trade and look for the next trade the next day, or on a different pair, or on the London Open or Asian Open, whatever. Again, I will explain everything in detail during our 5-day workshop. Actually, we start today is Tuesday, Wednesday, Thursday, Friday, in about 5 days, right? On Sunday in 5 days, we start going over the basics. And again, as I said, we are going to trade together for 3 days. So we will need Sunday and probably also Monday to go over the strategies, because we have different layouts for you to choose from. We have this classic, simple, new Spartan Renko charts. Then we have a different template. Again, Renkos in combination with Heikin-Ashi candles, as you can see here, and the MACD, which I personally don't use, but some students do with great success, so also good stuff. And we have another template, which is adding 2 different EMAs in combination with the T. Where's this? Here we go. Now it looks better here. With TDI index, again, EMAs, and just looking a little bit more conservatively for entries. Okay, so you can see both of those are combined with our classic Heikin-Ashi candles, and the basic one, the really simple one, is the new we're using. That is just Renko charts in combination with an EMA setting, with 3 different EMA settings actually, just to filter out the noise. So again, as I said, when you think it's time to get rid of a trade, you can always do this. In this case, just for exercise purposes right now, what we're going to do, we'll close the whole position and then it's done. Take whatever profits are made, and so you can take your break and actually do something else, right? What you will get with this, with joining the course, of course, is your indicator, your risk calculating indicator, which will do all the risk calculation for you. You just need to know the rules, that's all. You will get all the templates and all the explanation, and you will get the very, very fast Renko bar indicator. Will not slow down the PC, will not slow down MT4 in any way. It will be fast like a normal chart, and in combination again with this risk calculation indicator, whatever you want to call it. This is really great stuff, and you will need it for your trading in future. So I hope to see you all there. We start on Sunday. Don't forget to sign up, and I catch up with you soon, right? Bye.